Good morning to everybody out west, and good afternoon to everybody out east. We have a very exciting webinar today with some great speakers. We have two speakers who will be discussing how the private markets are benefiting from increasing using digital, how that's changing the access to capital and the impact on democratizing capital, including getting capital to Canadian businesses that didn't have access before. There's huge potential here. And Exponential, one of our speakers today, have a stated purpose to create value in ethical and responsible investing, which is also a pillar for Silver Maple Ventures. So I think we'll have some good discussions here. Once we've let these two speakers loose on the questions, we'll open up the floor for any other questions or chat that you may have. So our speakers today are Peter Paul van Hooken, CEO and co-founder of Front Funder and Silver Maple Ventures, and James Wallace, co-CEO of Exponential. Exponential's collective mission is to create positive social change by advising world-leading entrepreneurs, ventures, and investors as they navigate the digital asset space. And through that, they're committed to the democratization of global digital asset assurance and trading, resolving government and financial exclusion in the process. James, Peter Paul, welcome.
Thank you.
Thank you.
So both companies support businesses. Do you want to give us a bit of an overview of how each of your companies help businesses? James, would you like to kick it off?
Sure, absolutely. Think of us like a fully integrated venture capital firm. I think imagining that there's a life cycle in a venture from the earliest moment where the idea is conceived to fundraising with friends and family, all the way to what we would see as a Series A through Series E, which is some big fundraising in the 5 million plus range, and then the typical sort of liquidity event where there's some sort of IPO. We've put together a group of venture capital funds, a network of investment banks, and we have a markets team that actually connects via API to several digital stock exchanges around the world. So our intention is to really find amazing people building awesome things and nurture them from start to finish, where in the old capital markets and the old fundraising model, you typically get stuck between venture and Series A and not really sure how to get there, and then definitely stuck in trying to IPO or get some sort of public offering of liquidity. By having this entirely in-house, we're able to align interests all the way along and support the founders from start to finish.
That's fantastic. And Peter Paul, I mean, you've got a very different model, but doing very similar things. Do you want to tell us more?
Absolutely, yeah. So in a way, a different model, but addressing an extent the same problem. James referring to the stages of development, growth of the company, and how you follow that with your financing from a company perspective, and that's where indeed there are challenges, and sometimes referred to as sort of the funding gap or the valley of death, or those stages where entrepreneurs put some of their own money in, family, friends, perhaps a few angel investors, get started, and then they need to obviously continue and scale up, and you need additional capital to do that. And then it's not easy to find that capital, and the prospective investors to help in those phases is in a way is limited. And certainly here in Canada, if you look at the numbers of angel investing as well as VC, it's a limited capital pool that's available. And secondly, and this ties into technology, we'll talk about it later, but how can we leverage today's technology to basically facilitate that process of connecting companies with investors? And when you use technology, you use the internet, then of course that offers opportunities to reach out to a much wider group of prospective investors. Now, that's basically what we addressed with Front Funder. Front Funder is an online investment crowdfunding or private markets platform that connects companies from really early stage startup to growth companies to later stage private companies that may be on the way to go public. We connect those companies with the wider investor community, emphasis on wider, meaning essentially the public. So whether you're a seasoned investor with, you know, investment experience and deep pockets, or you're a smaller retail investor and you're excited about a company that you believe can really succeed and you'd like to see that company succeed and earn a return on that, the perspective of earning return, we enable those investors to invest in those companies. And we support that entire process from exploring investment opportunities to investing, to signing documentation, to transferring funds, to closing. Everything basically happens through our online FundFunder platform.
Fantastic. So you both have significant experience in the financial world. Can you walk the people on this call how the private markets worked when you first started working? Peter Paul?
Lots of paperwork. So I think, you know, that's for sure. That is it is certainly very inefficient. It is, and it ties into my earlier comment, it's a market that is typically accessible on the investor side for a very limited group of investors, and it's highly inefficient, not only from a paperwork perspective, but also from a connectivity perspective. So as I mentioned earlier, you know, if you're a company, how do you reach out to prospective investors? What can you do then, apart from running around with your pitch deck, flying around, going to the usual suspects? How can you leverage technology, online platform to reach out to those investors? So when I started in the private markets, I experienced how archaic it is, how it is completely inefficient, and how we're absolutely not leveraging today's digital technology to support that process. So that's how I founded the private markets, and I would say we're well on our way to definitely address the key challenges, i.e., creating that connectivity between companies looking for capital and the wider investor community, as well as completely digitalizing the process, effectively getting rid of all the paperwork.
James, is that a similar experience that you've had?
Yeah, absolutely. And I would say for me, more of my experience is on the venture capital side. So the really early stage, you know, fundraising, and that entire environment is an absolute disaster. Largely created by the venture capitalists that are not really incentivized to do a lot of work, and not incentivized to nurture the founders and make and allow more to succeed. Also, just really on the investor side as well. So not just the managers of venture capital funds, but the investors that come in are typically coming in with this idea of 6 to 12 years, which again is sort of an imagination or a fantasy that was created by someone somewhere for no good reason, really. The U.S. specifically has managed to lose its ability to do small cap IPOs, never mind micro and nano cap IPOs, and really not facilitated a innovation, which is kind of ironic because these are the people that are funding innovation, and yet their own model is archaic. So that's been the status quo until recently. No one has questioned that. The private marketplace for early stage investments is completely illiquid, completely static up until now, until people like myself and Exponential and companies like FundFunder have challenged that and said, hey, what if there was some liquidity? Hey, what if there was a larger pool of investors that we could serve? And we're really finding it hard to find a single argument against that. So obviously the constraints or the restraints is a dedication to compliance and making sure that all parties to private marketplace liquidity and transactions and trade are safe and secure. But beyond that, we've since 1993, I've been a serial entrepreneur since 1993, tech entrepreneur, and I have seen no innovation, no additional support to founders, no additional investor rights to investors in the venture capital world. And I'm really excited to be a part of trying to enhance that for everyone.
And that's really what I'm hearing. I mean, like for you at Exponential, you're providing a real support network for entrepreneurs, but we're also hearing that from the FundFunder side. You know, we're hearing, that going through, for example, the due diligence process has really helped companies prepare for the big wide world as well. So it makes sure that they are investable as well as, having a great idea. So you're both doing similar things in different ways. So it's great to hear. So we talked about sort of, I think I'm right in saying that the private markets are significantly larger than the public markets. Why have we not seen the same movement in private markets going digital as we have in the public markets? And what are the challenges with the private markets sticking to a paper-based system? Peter Paul?
Yeah, so you're right. The private markets are really, is I would say, where a lot of the action is. Although looking at the last couple of days, there's a lot of action in the public markets as well. Not necessarily for the good, not for the good reasons, right? So the reality is that indeed, Victoria, the private markets are growing twice as fast as the public markets. Twice as much money is raised in the private markets as opposed to the public markets, and so it's really becoming a really significant asset class. We see companies staying private longer, or never go public, and along their way to being acquired by other companies. So in that context, it's even more important to find solutions for opening up the private markets, making it more efficient and accessible for the wider investor community, and essentially as a means for investors to get exposure to investment opportunities in private markets, as well as to diversify their investment portfolio. The thing is that there are companies that are really became successful today. Some of them certainly in the social media, and because of its users and because of actually the people using it. And then finally, when those companies go public, if they actually ever go public, then the public can finally participate. The same people that are probably the early customers and made that company successful. So what we're saying with Front Funder is, well, why don't we offer those investors from the opportunity to invest in these companies from the very beginning? And so the private markets is as mentioned, it's becoming more important. We definitely more important to open access for the wider investor community. And to your question, the reason why that hasn't happened yet, I think we see it now. The fact that we're seeing companies like Exponential, Front Funder, and across the globe, we see how there's much more attention for the private markets, including from the regulators. The regulators definitely recognized the need for businesses, for private companies to provide them better access to capital, and also recognize on the investor side that the private market should be accessible for all investors, basically. Hence, that they introduced rules to facilitate, investment crowdfunding. And recently, as recent as last week, the SEC in the US announced proposals for further advancing crowdfunding rules, making it more accessible for companies, increasing limits, amounts of companies.
5 million is impressive.
Yeah, $5 million. So that's impressive. That really makes it. That's exactly addressing the funding gap that we talked about earlier, mm-hmm. right? So, and those rules are also in Canada. We see the same. 2 weeks ago, the Canadian regulators proposed to truly harmonize, because it's about time, the crowdfunding rules in Canada and make it accessible for both companies and investors. So, mm-hmm. so I think those are the reasons why we haven't seen as much, let's say, innovation of private markets until a couple of years ago. Now there is a business case. They're twice as big. It's where most of the action is. We're addressing the need for capital for companies, and we want to democratize access for the wider investor community. And that's why I think that you now see more attention going to the private markets in terms of, okay, so now it's about time to bring it, I would say, to today's technology level, if you like, and deploy digital solutions to really make it a more efficient market. One final quick comment, and I'll let James to comment to that as well, is indeed that secondary liquidity. I think one of the reasons is still, and this is definitely on the roadmap, and there's already a lot of developments, is how can we provide certain secondary liquidity in the private markets? Because that, of course, is people's concern is, hey, fantastic, I buy into this company, and what now? Now I may be stuck till this company has an exit. The answer is yes, actually, that's true. You need to be more patient typically, but we obviously need to look for ways to provide some sort of liquidity to give investors some comfort that, of course, they can exit these investments as well.
No, some fantastic points there. And James, I mean, you mentioned about sort of how VCs, especially in the States, have lost the ability. So, I mean, building on that, what are you seeing sort of, happening between the sort of the private markets, because they are so much larger than the public markets?
Well, it's happening to them. I don't. When we think about the people that really constructed the paradigm, the top venture capital firms, save a couple. There are a couple out there that really appear to be dedicated to the migration to a different and better system that I think rewards appropriately. But a quick point that I want to make, I think is essential, is that the public markets have been made electronic. We have electronic securities that are trading, and a paper security is a security. An electronic security is not a security. It's a facsimile. It's a representation. That's why it's held by third parties. It can be lost or stolen, and a digital security is a security. So we're going back essentially to the thing being the thing, and not being represented by another thing that's then custodied by a third party that no one ever touches or sees. The digital security is 1/5 to 1/10 the cost. It has immediate settlement, so no counterparty risk, unlocking hundreds of billions of dollars of liquidity immediately, 24/7, 365 trading, the possibility of access to global markets. This is not what's occurring in public markets. So most people's perception is public markets are pretty good, and it's only because they don't realize what's possible. It appears to move fast. I can buy that thing on my wallet, on my mobile phone. Cool. Well, you only have access to probably the number of companies that could be brought to market if a digital paradigm was embraced. So back to the private comments on the private side. I think, first of all, I just want to be clear. We have an opportunity here. It is vastly larger than the public markets. That's for sure. We absolutely have an opportunity to leapfrog past electronifying the private marketplace and embrace the digital paradigm, which is fascinating. Kind of like India jumped past the lines for telecommunications, the physical lines, and embraced the mobile paradigm and saw a massive increase in efficiency, innovation, and a massive reduction in cost. The point is this, is that I would find it very hard to make a case against the reality that there's corruption and with the regulators and the government that are supporting a paradigm of illiquidity to essentially enhance the returns for a select few people in the private marketplace. What I think is the statement, the less controversial statement, although I think it's a very important statement to just make, just plainly, objectively, unemotionally, this is what the data shows, is that this will happen to them. Regulators, as they see more and more service providers providing safe, secure, enhanced, trading transactions, issuing, and so on, from a digital mindset, they're just going to have to adapt to that because the opportunity is just too large to pass. So I think that this is slowly happening. That whole like drip, drip, drip flood. There are a bunch of people that sort of exited the ICO, the digital asset craze in 2017, and the serious people stayed back and said, what are the lessons here? Cool, really interesting models. Okay, how do we embed that in something like distributed ledger technology? How do we secure it? And there's been serious work over the last 2 years to create frameworks that are not only safe and secure, and they're much more safe and secure than the ones that exist in the public markets, but are also fully compliant. I think regulators are excited about that. So I think we're going to see regulators push it forward because it is so vastly more secure. And because of that, government's going to get on board, the ministries of finance, the Treasury Department, and so on. And it's really going to force a marketplace shift.
So I just a question to you, James. And so what do you think is the barrier for that? Or is it just inertia?
It's exactly it. It's You know, that idea, the future's here, it's just not evenly distributed. In this case, all the problems have been solved. We go very deep into reviewing financial service providers, their models, transactions, and so on. I mean, there are billions of dollars being traded cross-jurisdictionally with digital securities, which is really exciting. I think it's education, and then experience, comfort. Regulators are not about saying yes. They're about saying, here's all the ways that you can't do it. We're not going to tell you exactly how you can do it. We hope that you stay on side. And I think that they're going to need to see, you know, significant trade volumes across multiple different types of investors in multiple different spaces to feel confident and comfortable, even though it's really definitive. I think that there's been enough studies to prove that is the case. So I think it is exactly what you said. It's just inertia. And if we look at the adoption curve of new technologies, we're in that sort of just coming out of the trough of disillusionment when everyone thought that, you know, cryptocurrency and digital securities were the same thing. Couldn't be further from the truth. They're it'd be hard to come up with an example of something being vastly different. One is a decentralized permissionless issuance, and the other is a centralized permissioned issuance. And so anyway, the bottom line is that inertia, and it will, in my estimation, in the next probably 12 to 36 months, we're going to see a flood.
Perfect. So, especially in the week where we've got International Women's Day, and probably a very good question to ask. How do you feel digital assets have opened up access to capital for women, but also minorities and other groups that historically haven't had that access to capital? Peter Paul?
Yeah, I think you know, or simply by what we're doing with Front Funder, we are our whole promise to both sides of the marketplace is to open it up and to democratize it. So we make it with Front Funder inclusive and accessible for all sorts of companies and founders, including female founders and other minorities, to access the capital markets, as well as on the investor side, same thing. So simply by doing what we're doing, we're supporting that case. We want to do more than that, and as we're growing, we already actually working on partnership with female founders or organizations, and bring them on Front Funder and open it up for the wider investor community and female investors. So there's lots of work to be done there. It's still the numbers with regards to access to capital for female entrepreneurs is still pretty dramatic, with less than 20% from access to VC money. So there's still a big job to be done there, and I'm greatly believe in that we need to fix that, and that technology and using the internet and democratizing and opening up, just like we see in other industries, helps us to get there. And it's in that respect, it's also the whole opening up the private market still in its early days. It's still, certainly in Canada, where we also had some challenges with, as we discussed earlier, with the regulators, etc. That doesn't necessarily help to really advance it. And as well, there's an adoption time. People need to sort of learn about this. Like, this is actually possible. Yes, you can invest in private companies, and you don't need to be an angel or a VC for that. So lots of work to be done to. I feel like we're often on a missionary really thing here to get this word across, right? And it's also about identifying the change makers in the industry. I have, as even this morning, I had an interesting conversation with a venture capital firm that was quite categorical about, well, look, it's not a good idea that Joe the plumber gets access to investing in private companies. Bad idea. This is really something that we should do, and so we're saying, well, there's this massive group of investors that are not an angel, not a VC, and not perhaps also not accredited. In fact, not perhaps, we know 97% is not. But there's a huge pool of investors that may not meet this kind of accredited investor rules, but are certainly know what they're doing, certainly have investable access, and like to get exposure to investing in these in early stage companies. And so that all ties into back to your question on how can make it more inclusive, and in that respect, support accessibility for all groups, gender, everyone to the private markets.
And I think, what we're seeing is it is horses for courses. Not everything's right for everybody. So James, how are you seeing the digital assets opening up access to capital for women and minorities?
Well, one of our biggest objectives is democratizing access to early stage investments and early stage fundraising. So kind of two sides to the coin, the value creator and the value expander, the person that wants to add capital to the person with the idea. What a wonderful world that would be, and how in the world is that not the world that we live in? Well, again, we go back to corruption and greed. And I just want to be very clear why we did some analysis, and essentially what it comes down to is 300 people that sort of run the venture capital community informally. There's no collusion. Not that I'm aware of anyway. But these 300 people that are predominantly older white men are making the decisions on 99% of the venture capital that's deployed. And that is creating our world. If we believe in that 6 to 12 year sort of timeline of ventures proving out, that becomes our world in 6 to 12 years, primarily chosen by older, rich white men. And so again, why is that the case? Why has there been exclusion? Because that's been the model. So either unintentionally, we've created this boys club, essentially, that exists in Silicon Valley and other places, that naturally excludes people just by its very nature, even if it doesn't mean to. And so when we take that away and we say that's not the model anymore, we now have mechanisms, technology mechanisms, reg tech, so compliance mechanisms and so on, so that we can evenly distribute the opportunity to not only invest, but to fundraise. I think what we see is a planet, 7.5 billion people that are then able to access some platform, or probably a network of platforms, and actually choose where to put their capital. We believe that every dollar is a vote for the world. That's why, again, our financial inclusion is at the core of all that we do. So I think the digital asset paradigm, the digital securities paradigm, is naturally, if we embrace and allow it to be what it's going to be, it will just naturally become this, financial.
That's great. I'm going to go to the questions, but I'm also mindful we've actually come to our time. So one's a statement. I'm just going to read that out. Thank you, James. Entrepreneurs always see the opportunity and take risks and leadership first, then educate the regulators and government. All three levels of Canadian government are focused on economic development, of which entrepreneurship and innovation is known to lead the way and often leads the way. So yeah, very, very good point on that one. Thank you for that one, James. I have one more question come up. There's a Q&A on the bottom of your screen if you have any more. Because we've come to time, what I'm going to suggest is I ask this question, we wrap up, and then if you have any other questions, we can always respond to those. We'll send you an email with the response to those tomorrow. So, if you've got anything, we can make sure we get back to you on those. So the one question here is, for both panelists, what is the single most important make or break change that you want to see in North America's private markets over the next 12 months? That was a good question. James?
Yeah, it's a really good question. Make or break. I think that we've seen a nice move from the SEC signaling that it's willing to raise that crowdfunding level, which I would have said probably before that was a big part of it, because it's 8.5 to 9 million euro in many places in Europe. I think that the DTC as the central securities depository having the ability. So the biggest single shift, and this may not mean a lot to everyone, so I apologize if it's not interesting or entertaining. But we have essentially a monopoly. We also have a monopoly in Canada. The CDS, the Central Depository for Securities, is equivalent to the DTC in the States. And this is essentially the book, and this is where all securities, the central source of truth, in other words. Now, distributed ledger technology that powers, this is not blockchain, certainly not Bitcoin, as many people fear. Distributed ledger technology essentially does what centralized securities depositories do, allowing a change in regulation that says that a self-clearing entity or platform must use a central securities depository or equivalent. Right now, unfortunately, in most regulation or most jurisdictions, it says you have to use this thing that is a license. And in many jurisdictions, as I said, there's a monopoly. People didn't find it that interesting, so it was consolidated into one big monolith. If we had regulation that changed that said, if you can prove that your technology, you do not need to use that license or use that service, I think we'd see an explosion of.
So, Peter Paul, what do you want to see in the next 12 months?
Yeah, I had a bit more time to think about this question while James was answering. And, the make or break in the next 12 months, it's actually, to be honest, it's perhaps that the answer that the person asked the question like to hear, but I don't think we're going to make or break the private markets within the next 12 months. I think why is that? Because one of the mates actually of bringing this to success is that it's in a way that the private markets are opened up in sort of with measure and certain control, because and education, and because I'm obviously, as we discussed, a strong believer about democratizing private markets, increasing access, and everybody should be able to access the private markets. But at the same thing, we're talking about investments. We're talking typically also about depends on where you are in sort of the stage of development in private markets as a company. But we with Front Fund are dealing often with early stage companies, which we know have a higher risk. So it's important that how exciting it is that to all go into the private markets and invest in companies that you think are really promising and you like to see succeed, and they may not succeed, and you lose all your money. And that also needs to be explained to and clear to new investors in this space. And this is also why we as Front Funder take the screening of companies and providing information to prospective investors really seriously. So I think the regulators, my biggest problem here in Canada is the fragmented regulation, not so much the fact that there is financial regulation, because as James pointed out earlier, unfortunately it's an industry that's often there's a lot of temptation and greed. So it needs regulation. So I think for the next 12 months, it's about continuing the path, certainly that the regulators have now paved in terms of opening it up, and education on both sides of the marketplace. I think there's lots of excitement, but we also know the golden rule in investing is don't follow the herds. So let's make sure that investors know what they're doing before they all flood the private markets.
Mm-hmm. Great. So just looking at the time, I can see I've got some really good questions coming in, but I'm also mindful of your time. I think we're going to have to wrap up unless you have a couple more seconds. Just let me know.
Yeah, I can stay to answer.
Yeah, I have a couple more minutes. Yeah,
okay,
sure.
Perfect. So just the gentleman who made the very interesting comment, James, thank you very much for that. He actually then came back with a question is, what do the panelists have to say to the 3 levels of Canadian government that could be done for Canada to take the global lead in digital securities in the private markets? And as he quite rightly says, this is the core of today's discussion.
I can try to answer that. I think Toronto, Ontario, Canada is especially Toronto and Canada have very strong brands right now. I think that the Canadian sort of culture is known to be inclusive and warm and friendly, and Toronto is that, plus obviously very diverse, also fast-paced, but just likes fun and likes to dine. And the lifestyle is very strong in Toronto, and the brand is very strong for Canada. So I think the thing that it could do that would benefit the most is just lead in the discussion. So not expecting regulation to change dramatically overnight, not expecting the capital markets in Toronto to embrace this and run with it. But if we had leadership saying that we are fundamentally an inclusive nation and we have fundamentally exclusive financial regulations and financial markets, that is not okay. If we just had people in government step up and make that statement and then invite conversation, which I think we're very good at. I think we're very good at inviting discourse and information. I think that the entrepreneurs will come in with the solutions if the government shows that there's a will to actually support the entrepreneurs in creating these things and then delivering them.
Peter Paul?
Yeah, so I keep my answer a bit shorter because James already touched upon a couple of items. I think that the three levels, I believe, was indeed was in the question. I think, you know, and often, as we know, there's discussion about, you know, a national securities regulator and all that, and that's great. But I don't think we necessarily that's a sort of a necessary success factor. We know that securities regulation, investing, and, you know, that is basically a provincial matter, just like trade in most ways is. So I think, you know, as long as there's harmonization and there is basically, you know, coordination between provinces, and certainly with regards to securities regulation, and what we heard last week from regulators certainly sounds promising and encouraging. It always takes more time than we wish for, but, you know, that's I think that's a good thing. And I think it's also, to James's point, very important to, as a country, to show leadership. And I think that we all have the right cards with regards to you know, inclusivity and multicultural aspects in our country here to take that lead. And so I think we're very well positioned. I just hope that that we don't sort of fall behind, which is a little bit the case. Well, you know, is the case if we look at the investment crowdfunding side. Is that, you know, we see other geographies like the UK, the US, following the Jobs Act, which is a federal program, are definitely moving faster. So again, I hope that we don't sort of become lagging other countries, because there's no reason for that. It should be the opposite.
I think you both have really opened up this this discussion, and I think there's a lot more discussion that could be had, and especially explaining sort of how the internet can be used, but also really what is a digital asset and how that can change things, and how it's very different to sort of what we've been hearing about cryptocurrency. The fact we've got, you know, a centralized permission-based system that needs the regulators to step up and embrace, that really can solve that valley of death. And then also, you know, what companies such as Exponential are doing to support companies and entrepreneurs really from the beginning right the way through. And so I think that's been a fantastic opening conversation, but I am sure there is more to it. And I can see a couple more questions which we'll make sure we answer directly. So Silver Maple Ventures is currently raising capital for its online platforms, FrontFunder and DealSquare. As the leading investment crowdfunding platform in Canada, FrontFunder has secured its place as part of the fintech world, opening up access for capital for Canadian businesses and opening up investments into private markets for Canadians. To date, it's already secured over 33% towards its 1.5 million, up to 3 million raise. And full details and offering documents are available online on the FrontFunder website. Head to www.frontfunder.com to see the full offering documents and financial statements. You can review them, make your investment all online from $500. If you usually work for a broker or advisor, please let them know they can register on DealSquare to make your investment. In both cases, if you have any questions, there's a chat box with a real human to answer any questions you may have. And there's also a Q&A on the campaign page. So I just want to say thank you very much to everyone who attended today. We had a great turnout, and particular thanks to James and Peter Paul. It's been always good to hear two leading fintech leaders share their knowledge. Thank you very much.
Thanks, Victoria, for moderating this. Thank you. Thanks, everyone.
Thank you. Bye-bye.